Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. Washington and Beijing have reached an agreement allowing US auditors to inspect China-based accounts. The first step in a process that could prevent around 2%, 200% Chinese companies being kicked off American stock exchanges. Samuel Chiu, market specialist CJ is kind Singapore. This is seen as positive first step. However, things are not fully cast in stone yet. As seen from the various sudden reversals in the past, Kenny and G Securities Strategy China Everbright Securities Hong Kong. I think if the agreement is finally to be reached, the market sentiment will keep improving, which will support the Hong Kong stock market, especially the technology sector. For the short term, the HSI will keep the upward momentum and may challenge to the 21 level next week. For the midterm, the recovery progress of the Chinese economy will be the core factor for the stock market. Paul Leader, Miller, and Chevalier, Washington, D.C., former director of the SEC's Office of International Affairs. Clearly, the Chinese authorities feel the pressure of possible delistings under the Holding Foreign Companies Accountable Act by explicitly tying the ability to maintain a U.S. listing to the PCAOB, the ability to conduct inspectors of a company's auditors. Congress imposed a cost on China for its long-standing refusal to permit the PCAOB to conduct inspection of U.S. registered accounting firms located in mainland China and later Hong Kong. The real issue is whether the Chinese authorities will now honor the deal and provide the PCAOB unfettered access to the auditors' work papers. For more than a decade, the answer has been no, but now that the threat of delisting is real, it looks like the answer from the Chinese authorities may be different. Winston, M.A., adjunct professor, New Law School. This is a compliance issue, so the implementation of this framework in the coming months will be the key to the success of this complex cross-border setup. Marcia Ellis, lawyer at Morrison and Foerster, Hong Kong. We expect that China's headquartered companies with sensitive data that have not yet listed will prefer listings in Hong Kong even if the PCAOB issue is resolved. In addition, listing in Hong Kong also insulates companies from what may continue to be a continuous relationship between the US and China in the year next few years, even if the PCAOB issue is resolved. Thomas Hayes, managing member, Great Hill Capital, New York. A long time coming, this has been a huge overhang on China's ADRs, causing some of the higher quality business like Alibaba be mispriced for some time. As the deal moves forward and the fog is lifted, many of the stocks will have significant appreciation, not because the business changed, the big tech platforms have weathered the pandemic and crackdown fairly unscathed fundamentally, but because the uncertainty has been removed in feeding investors back to growth. Zhang Zihua, Chief Investment Officer, Beijing Uni Asset Management. This is definitely great news for US-listed Chinese companies, in particular the leading tech firms, as they don't have to worry about being forced to delist from New York due to regulatory reasons, and their valuations can also be repaired. Tariq Denison, Managing Director, GFM Asset Management. I plan to continue allocating time and capital to China. It's just too big and too important to ignore. If this result is in better quality financials, of course, that would be a huge plus. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. Thank you.